Today, we could call it Jensen and the AI comments. I mean, his earnings statement, folks, is absolutely phenomenal. He talked about their sales being, yes, off the charts, cloud GPUs sold out. Of course, if that wasn't enough, he added for the haters. AI is going everywhere, doing everything all at once. Now, of course, in addition to sounding like a Johnny Cash song, those words were music to the ears of investors. Even though gains have been erased from today, the fundamental story of this just gets better and better and better. The legend of naysayers, the legion of naysayers, rather, have been out in force today, talking doom and gloom again. Here's the thing, folks. We used to celebrate this stuff, like Wired, for instance. They used to celebrate technology. I think it's politics that has a lot of people thinking differently about this. In fact, they suggest that AI is an existential threat. But once again, it's the masters of the universe who were caught off sides. They may be doing a little better by now, but look at this bet. I want to tell you why things have been the way they've been, why the news has been the way it's been. So you've got the hedge funds who went extremely short, right? And then, of course, they get their friends in the financial media all day long, pounding for the last few weeks, pounding and pounding, fanning the fear of flames. And, listen, you set up the stage for a session like today. You want it to work in your favor. But I got to tell you, it might have been working too well, at least coming into the session, because NVIDIA is normally, the shares normally, before they report are usually up. This time they were down, the exact opposite. But the most important thing is they're always volatile until about 30 days later. 10 to 30 days later, that's the period they start to shake out. But think about what people are betting against. Just for a moment, let's put this in perspective. So quarterly revenues for NVIDIA, not long ago, April 2023, were $7 billion. This last quarter, $57 billion. Try to fathom that for me. Just think about that in your mind, how a company can grow that well. The only thing you could argue is that maybe it doesn't get better than this. And while everyone is sort of, fretting about all of this, my next guest has become even more bullish. In fact, she was one of the first tech analysts to get on the NVIDIA bandwagon. I think she started it back when there were even more skeptics than there are today. So I want to bring in IO Fund, their lead tech analyst, Beth Kindig. And Beth, first I just want to talk about the quarter. Just how surprised were you? Because I know you're optimistic, but it feels like they checked every box.
Yeah, I love talking NVIDIA, Charles, especially today. I cover this stock very, very closely, and I continue to be surprised, whether it's the margins expanding, the large free cash flow margin. Most importantly, there was sequential growth of 25% at this scale. That's very surprising. The more that people talk about an AI bubble, I would counter that. I say the bigger concern is the opportunity cost of not investing in AI. If I showed you this company today, if it was a brand new company today that I showed you, you'd say, wow, this is an incredible company.
What do you think about the market, the stock reversing? It was up huge and then it's pulling back a little bit here. What do you make of that?
I see it as a buying opportunity. The facts are on the table. This company has extremely strong fundamentals. It's a picture perfect report last night. When the market is down on these really strong earnings reports, that is an opportunity to me. That is the moment that there can be alpha. When you're jumping on a bandwagon, that's when things are risky. But when you can spot these strong earnings reports with these quality companies, I'll take it lower any day.
So in the meantime, Jensen, looks like he had a little bit of fun with this. So he forcefully pushed back on detractors, including Michael Burry. But of course, there's still some people are saying, well, things like cloud credits are worrisome. Just your thoughts, okay? I think the utilization part of this thing may have been put to bed, but there's still a few lingering concerns and people saying that there's still some hidden issues that haven't been resolved.
Yeah, the argument I like to make is AI is early stage technology, much earlier than the public markets is used to. Typically, you incubate this at the venture capital stage. So the point being, Charles, is we will get into a big stage here around monetization. We haven't even gotten there yet to see AI truly monetized. We have not gotten to see how AI will affect profitability. So the naysayers are really jumping in a little too early, where investors have this opportunity to get in before revenue starts to accelerate, before profits start to expand. Because by the time that happens, these companies will all be trading much, much higher. So I like having that edge myself.
Beth, you put out a report and You say NVIDIA is going to get to a $20 trillion market cap. And by the way, not over the next decade or so. You're saying by 2030. Walk us through how this happens.
Yes, I put out a prediction for a 20 trillion market cap by the end of this decade. That's a 36% CAGR over the next 5 years. Charles, yesterday they put up 25% quarter over quarter growth. They guided to 15% quarter over quarter growth in 2 quarters. I already met my CAGR I need for the next year. It's really that consistency that NVIDIA keeps putting up that is making these numbers possible. When I put out the 20 trillion market cap, I wanted to give people a heads up that if you do the math, this company is headed higher for a long time. And I see it hitting that 20 trillion by the end of the decade.
Of course, a lot of this also means that the hyperscalers still have to put a lot of money in, and all those things still have to be to click. And when it comes to NVIDIA, you also say offense is the best defense. With respect to this roadmap,
NVIDIA reversing course and moving lower over the course of the day, despite last night's earnings beat. Stock dragging the broader market into the red as well. Joining me now to discuss is Wedbush's Dan Ives. So, Dan, NVIDIA's numbers really cap an earnings season where these companies pretty much did everything they were expected to do and more. Recommitting to the AI trade, essentially saying that they're still enthusiastic about it. Why is the market in general not really giving them credit for it?
Look, first, I think that was a masterpiece quarter, right? And I think any worries about the AI bubble thrown out the window in terms of fundamentally when you heard from Godfather of AI, Jensen NVIDIA. Look, I think it speaks, and you've talked about a lot on the show, worries about circular financing, like where this is going to go. Can the data centers going to get built? Is there capacity issues? Look, I just continue to view when you put the pieces together of the puzzle, as well as our 3 weeks in Asia. This is third inning, top of the third, one out of this AI game, and that's why I just think names like NVIDIA. Days like today, you buy names like Oracle, Microsoft, NVIDIA, because I believe this tech bull market has another 2 years left.
I mean, as a baseball numbers guy, we now know sometimes the third inning is your high leverage inning, where you got to kind of bring in the best arms and try to put down a threat. And I'm wondering right now if NVIDIA's numbers, and I've been kind of puzzling over this all day, as great as they are and as much confidence as Jensen has about the next 4 or 5 quarters, you wonder if everybody can have equal confidence in the customers that are giving him all that money and allowing him to earn those margins on their spend, and when they're going to sort of get clarity about the payback.
Look, it's a great point, but I would just say, look, in the U.S., 3% of companies have gone down the AI path. Europe, 0. You look at, in Asia, ex-China, minimal, less than 1%. Sovereigns, Middle East, just starting. I mean, my whole point is that, right now, demand to supply is 12-1 for NVIDIA chips. And of course, AMD and others are going to play. But the reality is that we are still early. I mean, you're talking more money is going to be spent in the next 2 to 3 years than the last 8-10 years combined. So I get some of the worries, but I believe the bears will continue to watch this AI party from the outside looking in as they continue to prove it out. And I think streets underestimating numbers anywhere from 15 to 20%.
Right.
Next to 12
But is that not the bull case for NVIDIA and the whole food chain for the infrastructure build out? Can it not also be the bear case for the Metas of the world and the Microsofts that feel like they're on this unending treadmill of having to spend, hoping that they get the return?
Yeah, and I think, but I do think it's a little more than hope, because the reality is that the use cases, if you almost put the pieces together, look at Palantir, look at MongoDB, look at Snowflake. So you see the use cases are exploding. Look, and it's an arms race that they are having to continue to spend on, and you're going to see the same with the Oracle. But I think Meta, we look out 12 to 18 months. This was a table pounder moment, just like we saw with Alphabet as a table pounder.
Well, is
NVIDIA still a must own? With the stock selling off, do you buy more here?
I think that NVIDIA continues to be the platform company. In terms of designing the whole system, we have a lot of good catalysts in terms of them being able to unlock new TAM. And a lot of times, when you are pushing the boundaries of frontier models, you need that compute. So as long as the scaling laws hold, and NVIDIA is a platform, kind of AI company. I think that things are getting harder to deliver the performance. And so I think that plays right into what NVIDIA does. And I think the whole space, the TAM is growing for compute. And so I continue to think that AI infrastructure is largely a multi-year build out here.
It's a reminder that while your companies may be doing extremely well, their stocks, they can separate. It could be another story. Case in point, the biggest stock in the world, NVIDIA. Last night, NVIDIA reported one of the best quarters I have ever seen. Ahead of the report, there was tremendous angst that somehow they would blow it. They'd print a subpar set of numbers, and the stock would blow up. Instead, what happened? NVIDIA reported an astonishing sales number, earnings number, gross margin number, customers, fantastic. And what happened? The stock blew up anyway. But not before it soared higher both last night and this morning. NVIDIA stock opened at 195. That was up about 8 from yesterday, but then closed at 180. A hideous swing that obliterated those who bought the opening, and a lot of people did. The volume was high. Why do I keep stressing this huge intraday swing stuff? Okay, let's get technical for a second. When you get that pattern, it's a huge up opening and then the whole market craters, including your stock, professionals associate that with a very nasty moment. If your company can deliver the best quarter possible and your stock finishes the session down anyway, well, you can expect more pain. Why not? Because if it can't rally on the greatest news possible, what else can make it move back up? Sure, it might not play out that way this time, but pattern recognition matters. And right now, the pattern is terrible. I don't sugarcoat this stuff. And I say that, no, not changing my stance. I think you need to own NVIDIA, not trade it. But I understand the pain. There's been so much pain since it was at 2. Let me tell you what you're supposed to do when you see this kind of pattern. You have to do a check down, just like a quarterback in the NFL looking at his receivers. First, you ask, did you miss anything with NVIDIA that makes this quarter look a lot worse than it did at first glance? I read the conference call once, spoke to the company, read the conference call again, went to dinner with friends, and then read the call a third time with some analyst notes. I'm confident I missed nothing. Demand for the chips is extraordinary. Gross margin stupendous. Their customers, unlike what's constantly being said by the nattering nabobs of negativity, can't get enough of NVIDIA's chips, and they're making a lot of money with them. The customers, I'm going to repeat that, are making excellent money with these chips, including some use cases where Meta, as Jensen Huang, the CEO, was explaining, demonstrable earnings gains. Second, you have to ask if there was anything in the cohort away from NVIDIA that could explain the weakness of NVIDIA. You have to survey the landscape to see what would explain the weakness. For that, what I like to do is look at all the intraday charts of various stocks overlaid upon the stock of NVIDIA. Here's what I found. A profound, pronounced set of declines in the most elemental of tech stocks, the basic semiconductors, which have been rallying like crazy for weeks. Micron, SanDisk, Western Digital, these are storage plays, all computer companies that have been going parabolic for months now. They, not NVIDIA, had become the momentum plays. Earlier this week, a Morgan Stanley analyst used the dreaded term super cycle, which almost invariably leads to a top when you hear it. As was the case with the last 2 super cycles that were called the fracking sand super cycle and the coal super cycle. Both turned out to be long-term tops, heights that were never, ever seen again, and then a crash. Sure enough, these storage stocks have been cratering for the last few days, almost on cue with the ill-fated, ill-advised super cycle call. These storage players like fracking sand and coal are commodities. Right now, they're in shortage mode because they can't make enough storage to meet the demand. I'm sure we'll discover that the shortage was just alleviated somehow. We don't know. Perhaps by some semiconductor capital equipment surge, and the prices have started to moving back to equilibrium. Equilibrium means lower prices. What else? Again, sticking with the concern that the biggest capitalization stock in the universe might be behind today's reversal. I noticed that one of the most closely correlated situations to NVIDIA's trading of all things is crypto, especially Bitcoin.
All right, I hope you're all doing well today and staying calm in this market. Let me quickly address what's happening in the market today so you know what's going on. Much of the market opened notably higher this morning following NVIDIA's fantastic earnings report yesterday. And then later in the morning, we got a lot of Fed speak. Morgan Stanley said they no longer expect a Fed interest rate cut in December. And Fed Governor Cook said she sees an increased likelihood of outsized asset price declines amid high valuations in stocks. That appears to be what sparked the market sell-off this morning starting around 10:45 a.m. Eastern. And then shortly after that, BLS announced in a statement that the employment situation for November 2025 is to be released on December 16th, which is after the next FOMC meeting. This caused market participants to worry even more that there may not be a December rate cut because perhaps the Fed won't have enough data to justify a rate cut. This sell-off had nothing to do with NVIDIA. It's just more Fed speak and worries about both employment and interest rates. If I'm being honest, I think this is all an overreaction to headlines with what appears to be inorganic price action. Just look at the price action of the SPY on the 5-minute time frame during the sell-off, and you'll see what I mean. Now, I want to cover NVIDIA's earnings again like I did in yesterday's video in case you missed it, so that we're all on the same page, because we learned a lot of important information on the earnings call. Also, I'll briefly mention that today there have been many NVIDIA price target upgrades following yesterday's earnings. I've already seen at least 15 price target upgrades just today, and that number will likely increase in the days ahead. Now let's talk about NVIDIA earnings. This was a very solid quarter with very strong guidance. Revenue came in at $57 billion, beating both the consensus and whisper numbers. EPS was $1.30, beating estimates, and non-GAAP gross margins came in at 73.6%. Next quarter revenue guidance came in at a very strong $65 billion, beating both the consensus and the whisper numbers. Guidance for next quarter non-GAAP gross margins came in at 75%. You may remember that early this year, NVIDIA told us that margins would move lower as they would speed up Blackwell production, and that margins would return to the mid 70% range late this fiscal year. NVIDIA is delivering on that promise. Jensen also said, quote, Blackwell sales are off the charts and cloud GPUs are sold out. Compute demand keeps accelerating and compounding across training and inference, each growing exponentially. Now let's get into some of the interesting details that we learned from the earnings call. I'm just going to rapid fire multiple points that stuck out to me because we learned a lot of important details across many different topics. First off, Rubin is on track to launch in the second half of 2026. NVIDIA addressed the concerns about GPU depreciation head-on, with CFO Colette Kress saying that A100 GPUs shipped 6 years ago are still running at full utilization today, powered by a vastly improved software stack. This is in full agreement with what I've been saying for the past couple weeks following Michael Burry's recent post on X. The hyperscalers are not extending the useful life of GPUs in order to artificially boost earnings. Rather, they have come to the realization that the useful life of the hardware is longer than what they originally estimated due to two factors: NVIDIA's continuous improvements of older generation hardware through software, and second, the world being compute constrained in the face of extremely strong AI demand. Those are the exact two reasons NVIDIA leadership gave as to why A100s are still running at full utilization 6 years after they shipped. This is not a bubble. This is insatiable demand. Developers will use whatever compute they can get their hands on right now, and that, in combination with continuous improvement of the hardware via software from NVIDIA, extends the useful life of the hardware. Ignore the noise. Now let's get back to the rapid fire of important points from the earnings call. NVIDIA expects input costs to rise in fiscal 2027, but they are working to keep gross margins in the mid 70% range. NVIDIA does not see an AI bubble at all. They see the complete opposite. Jensen was asked to clarify the $500 billion graphic he showed on stage at GTC in October, and it is exactly what I've been telling you. He meant there will be $350 billion in revenue over the next 5 financial quarters, and $150 billion worth of GPUs has already shipped. The $500 billion number is cumulative revenue through both 2025 and 2026. And on the topic of the $500 billion, NVIDIA CFO said, quote, the number will grow. Jensen also said that with each new generation architecture, NVIDIA's share in the data center grows. Jensen said that NVIDIA's GB200 and GB300 are substantially ahead of the competition on inference. Jensen told us that the GB200 has a multi-year lead on the competition when it comes to inference. Keep this in mind the next time you hear someone say that NVIDIA systems aren't good at inference, because they're actually the best on the market at inference and most likely will be the best for years to come. Jensen was asked if his views on custom ASICs have changed, and he emphasized that AI is incredibly diverse, and you want to system that can handle a wide variety of workloads given that AI is constantly changing. Jensen was asked about NVIDIA's methodology in choosing whether to do share buybacks or invest in other companies. Jensen said that NVIDIA will absolutely continue to do share buybacks, and he also emphasized that every single investment NVIDIA has made has been a strategic investment to expand the CUDA ecosystem. NVIDIA is not simply throwing money around. They're making strategic, very high probability investments. Jensen was asked how the large spending commitments from companies like OpenAI, Anthropic, and others will be paid for in the coming years. And Jensen reminded us that these companies are the fastest growing companies in history, and their revenues are growing exponentially. They will be able to make the investments as their revenues scale. Additionally, Jensen told us that many well-known large enterprise companies will soon start spending big on AI, which will help fund the build-out. Jensen also spoke about the importance of agentic AI at length. And CFO Colette Kress also mentioned physical AI, saying that physical AI addresses a multi-trillion-dollar opportunity and, quote, the next leg of growth for NVIDIA. As a reminder, I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026, and then I think the next major surge of compute demand after that will be fueled by physical AI. There's a reason why I've been pounding the table about NVIDIA's physical AI business in recent months, and Colette reaffirmed why on the earnings call. In her words, it addresses a, quote, multi-trillion-dollar opportunity. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business, and I don't think this is getting enough attention right now. But I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. Overall, this earnings report was fantastic, and the guidance was even better. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.